In turn, the pressures may capitalize on a weaker greenback and move higher. In this report, we aim to shed light on the catalysts driving the precious metals price and asset future outlook. Today's CPI print came in slightly lower than what was expected, yet the core CPI, which is the Fed's favorite tool for gauging inflationary pressures, came in lower as was anticipated, potentially validating part the comments made by Philadelphia Fed President Harker of skipping the FOMC meeting, which is set to take place tomorrow. Following the CPI print, the greenback appears to have weakened against its counterparts, as signs of easing inflation appear to be swinging the market sentiment in favor of the Fed keeping the interest rates at par, rather than continuing its aggressive rate hiking path. With the pressures on the Fed to hike interest rates now easing, we note the weakening of the greenback against its peers may have facilitated the precious metals rise to higher ground, once again highlighting the inverse relationship between the pressures and the greenback, allowing gold to capitalize on the dollar's weakness and move higher, as it will now be cheaper for overseas investors to buy gold, which is denominated in US dollars. For the 7th month in a row, China has increased its gold holdings, bringing their total of 2,068 tons, rivaling those of Russia, as they now only have difference of approximately 300 tons of gold difference before China surpasses Russia in gold reserves, according to data for the first quarter of 2023. The continued addition of gold may appear to be part of a prolonged strategy of reducing China's and other central banks' dependence on the greenback as the world's reserve currency. Through increasing their gold holdings, China, alongside others, may be attempting to reduce their exposure to high volatility market events involving the dollar and as such potentially reducing their dependence on the greenback, overall by diversifying into other more stable assets. Albeit a far-fetched scenario, yet following statements that the BRICS nations, which are composed by Brazil, Russia, India, China, and South Africa, that they are all looking to adopt a common currency in an attempt to rival the greenback, the currency could in theory be backed up by gold. A standard could potentially compete with the greenback for dominance, yet that would be a behemoth task for anyone attempting to upend the dollar's dominance, as the gold reserves would most likely have to be sustainable and surpass major competitors in order to maintain a stable price. The Eurozone entering a technical recession may have spiked fears of economic downturn in the future. Following financial releases that Germany and the Eurozone as a whole have now entered a technical recession, speculators may wonder which economy will be next and how many more will join them. It may be the fears of a global economic downturn could overall support the price of the precious metal, given its relationship as a hedge during time of financial uncertainty. Hence, should more economies enter a recession, even a technical one, we may see the gold's price capitalizing on market uncertainty in regards to the health of global economies. Thank you for watching.